Hello and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from your digital study guide. They're the problems that are for Group B in Chapter 4. And as always, if you don't understand something, remember this is accounting, so it's about understanding an application. If you're watching the video and you still don't understand it, then most likely it's something that you don't understand from the theory perspective. So go back and watch theory videos and for the chapter, and where I can point things out, like for example doing the income statement, balance sheet, that type of thing. I saw in the exercises that we had those, and as I was just skimming through the problems, we have pretty much the same type of problems as we did have in the exercises. So for things like financial statements, you may have to go back a couple of chapters to chapters 2 and 3 and watch those videos for theory to understand. And if you still don't understand, feel free to telephone and speak with an instructor. Okay. All right. So let's move on to the problems here. And all right, get my pen. Come on, pen. There we go. Okay. It says here the following purchase-related transactions occurred during the month of June. Journalize the transactions and omit explanations. Okay. All right, so these are for purchases, and remember that sales and purchases are two sides of the same coin, just like accounts receivable and accounts payable are two sides of the same coin. Okay, so if you know how to do one, you know how to do the other. It's just doing the opposite. I mean, let's face it, sales, you're selling something, and purchases, you're buying something. Right? So let's work through these transactions. Right? So it says June 3rd, purchased $7,700 of merchandise, paying cash. So when I make a journal entry, I have the date, and I do my debits first and my credits last. All right, well, I list my debits first and credits last. So, the first question I ask myself, am I affecting cash? And yes, I'm paying cash. So if I'm paying cash, my cash is decreasing. So I have a credit to cash for the $7,700. And what am I buying? I'm buying merchandise. Okay, so is that an asset, liability, equity, revenue, or expense? Well, it's buying merchandise as an asset because it's something I own. It's obviously not something I owe. It's not equity, and I'm not making a sale, and I'm not paying for any of the expenses for operating the business. So if I look underneath my assets, I should have either a merchandise inventory or an inventory account, and I'll debit that for $7,700. So that's that entry. All right, pause the videos because I'm going to keep on erasing, do everything on the bottom portion of the screen. All right, so that's June 3rd. June 9th, purchased $6,500 of supplies on account from Supplies Unlimited. Terms net 30, FOB destination. So 6/9, all right. So I'm purchasing supplies on account. So am I affecting cash? No. Am I affecting accounts payable or receivable? Yes. I'm purchasing on account, so that's an accounts payable, and I increase my accounts payable on the credit side, so I credit accounts payable for $650, and debits have to equal credits, so I debit something else. And what am I buying? Well, I'm purchasing supplies, which is an asset. Right, so I debit supplies for $650, and that's that journal entry. Okay, 6/16. It says purchased $5,600 of merchandise on account. Okay, and it gives us terms and FOB. So this is basically like the June 3rd entry. The only difference is that it's on account, which is just like the June 6th entry. So I'm sorry, the June 9th entry. So I'm going to credit accounts payable because I'm buying the merchandise on account of $5,600, and debits have to equal credits, so I debit something else, and I'm buying inventory, so I'm going to debit the inventory account for $5,600, and that's it for that entry. Okay, 622. Okay, so it says received a credit memo on the amount of $450 from Brown International for damaged goods from the June 16th purchase that were returned. Okay, so, and maybe I shouldn't have erased that entry, but the entry was a debit to inventory and credit to accounts payable for the 5,600, right? So what is it saying here? You have to think through this. I mean, on June 16th, we are purchasing the 5,600, okay? Now it says received a credit memo for $450 from Brown, okay, for damaged goods from the June 16th purchase that were returned, meaning on June 16th we purchased that and we returned it, so we're getting a credit memo back from Brown International for the amount of $450. Well, remember, in doing a credit memo, all we're basically doing is we're looking at the previous transaction or transactions and making a reversal in proportion to whatever is being returned. So in this case here, since I do my debits first, all right, reversing it means if I have a credit to accounts payable, to reverse it, that means I do a debit to accounts payable. And in that case, it's for $450. And if I have a debit to inventory, I credit inventory for $450. Right? And so that's the journal entry for that. Okay, so that was through 622. All right, so on 630, it says here, paid for the supplies purchased on June 9th. So the entry we had made on June 9th for the purchases was a debit to supplies and a credit to accounts payable, and that was for the 650, right? So it's saying here paid for the supplies purchased on June 9th. Okay, we're not, first of all, if I'm going to make this journal entry, okay, and I go through the thought process, am I affecting cash? Yes, I am affecting cash because I'm paying for the supplies. So my cash is going to decrease. To decrease an asset account, I credit it. So I'm going to credit cash for the $650. Now, my debits have to equal credits and they have to debit something else. Well, what am I going to debit? If all you do is you just read paid for the supplies purchased and you stick supplies in here, that's wrong, okay? That is wrong because you're not paying for the supplies. You're paying off the accounts payable, all right? And in order to be able to see that, let's use our T accounts, okay? So I have an accounts payable account here, I have a supplies account here, and I have a cash account here, okay? Now my original entry here was a debit to supplies for $650, okay? And then I had a credit to accounts payable for $650. Right now it's saying you're going to pay for the supplies. Well, I'm going to credit my cash for $650, and that means I have to debit something else. Well, I can't debit supplies because if I debit supplies, then my supplies is $1,300, right? Which is wrong because I only have, $650 in supplies, not $1,300, right? And we are, paying off, what we owe. So as you can see, if I made a credit here to cash, I have to debit something else. And when I debit my accounts payable, right, the balance in my accounts payable account, so I'm going to debit accounts payable for 650. Having to debit my accounts payable account means I have a zero balance, and that washes itself out. So all I'm left with is the debit to supplies for 650 and the credit to cash for 650 as if I was paying for in cash. If you go back to the theory videos, you'll recall that using accounts receivable and accounts payable is, on account only facilitates the doing business. Okay. The net effect is, you're going to pay cash and, for whatever it is that you're buying. Okay. Or you're going to receive cash and, have made the sale for something if you're using accounts receivable. Okay. The accounts receivable and the accounts payable end up washing themselves out, have a zero balance. Okay. And so you're left with an entry that in effect looks like you paid cash for it, but in reality you did buy it on credit. It's just that when you pay off the credit, or you receive payment for the credit, for the accounts receivable, the net effect is as if you were just treating it like cash. Okay, but when you're reading through this particular transaction here, you don't just think about, oh, I'm paying for supplies. You have to look at the entry from June 9th, which is what we had there, in order to be able to determine what you need to do, and using the T accounts helps you do that. Okay. All right, and let's see here. The last one is 630, paid Brown International in full for the June 16th purchase. Okay, so on June 16th, our entry was a debit to inventory and a credit to accounts payable for $6,500. But on June 22nd, we also had a credit memo, right? Remember the June 22nd. So, even though it says June 16th purchase, we have to go back through our entries, and that's where making T accounts, helps in this respect. Because if I have an inventory account and I put the 6,500 here, and I have my accounts payable for 6,500 here, okay? And then if I did my June 22nd entry, which was a debit to accounts payable and a credit to inventory, remember reversal there, and that was in the amount of $450. Okay, well then under my accounts payable, I have a debit of $450 and a credit of $450 here for inventory. So being able to look at this, if I'm going to pay in full using cash, even though it says paid Brown in full for the June 16th purchase, I'm not going to just look at the June 16th entry. I have to look at all of the entries that are affected by that initial purchase. So when I come back up here and I look at it and I'm paying it in full, well, what am I paying? Just like the purchase on supplies, I'm not messing around with the inventory. Okay, I'm messing around with the accounts payable because I'm paying it in full, and the balance, the difference between 6,500 and 450, the balance in the account at that time is $6,050. Okay. Hold on one second here. Am I using the right numbers? Oh, I'm not using the right numbers. Sorry about that. It was, instead of 5,600, instead of 6,500, it's 5,600. Okay, so sorry about that. I wrote that wrong. Hey, even I make mistakes. Okay, so the difference between those two is 5,150. Okay, so I'm I'm going to be paying off my accounts payable. Well, that means I'm going to debit my accounts payable for 5,150, right? And of course, debits have to equal credits, so I have to credit something else. Well, yeah, I'm going to credit cash because I'm going to pay out cash, but I realize and remember that when I look at that purchase, the purchase was with terms of 2% 15. Well, 15 days from the 16th is 31, all right? Or it ended up actually being August 1st, okay? Right? If you draw that timeline of 6/16, 15 days from that actually means not August, July 1st. Sorry about that, because there's only 30 days in July. All right. And we're actually paying it on June 30th, so we're falling within that discount period. Okay, so I have to be able to take 2%, right? Well, if I have 51, if I had, let me think about this just for one quick second. Okay, so I actually paused the video, and the reason why I paused the video was because I had glanced down at the journal entry that's being made in the solution manual, and there is an error in the solution manual. Okay, when you're looking at those the journal entry for this particular problem, they're showing International Inc. and their accounts payable. I'm sorry, the accounts payable is 5150, which I agree with. But when you look at the cash, it says 5100 times 98% or 0.98, and it says inventory 5100 times 0.02. It should not be 5100. It should be 5150. Okay, because you had 5600 in inventory, and then you returned, you got a credit memo of 450, which means you're looking at 5150 that you're going to take the 2% discount on. Okay, and if you take the 2% discount on 5150, they round it. So 5150 times 2% is $103. Okay, so my discount, I'm going to credit my inventory, right, for $103, and of course the difference between 5150 and 103 is 5,047, which is how much I'd be paying in cash. All right, so I would also, or I could also have gone and said 50, taken the 5600 less 450, which gave me 5150, and then I could have multiplied that by 98% in order to know how much to pay. Why? 100% less the 2% discount gives me 98%, and then of course that ends up being $5,047, which is what I would have ended up paying in my cash. Okay, or I could have taken the figured out the 103% discount, 103% for the discount, and then taken my 5150 and subtracted the 103 and ended up with 5047. So I could have arrived at that cash amount in several different ways, but the bottom line being here is that that solution is there is incorrect information there. It shouldn't be 5100, it should be 5150, even though the figures that they're crediting 5047 and 103 are correct. Okay, so in making this journal entry, like I said, we're for our accounts payable, we're going to pay in full, so we want our accounts payable to have a zero balance. So I debit my accounts payable. If I post this journal entry to my T accounts, I debit the accounts payable, which means now the accounts payable has a zero balance, right? And of course, my inventory, I'm going to credit my inventory for 103, all right? So now that has a balance of 5,600 minus 450 minus 103, or the 5,047, okay, which is, you could think of it as a double check because that's the actual cost of my inventory to what I'm paying in cash of 5,047. And then of course I have, I'm sorry. And so that's the double check to that, the net effect is that my accounts payable washed out, and I'm leaving myself with what I actually paid, as if I was buying the inventory straight up using cash instead of using accounts payable. Okay, so I realized that was a little sketchy there because of the problem that I found in the solution there. But I hope you understood that, and if not, go back and rewind the video and watch it again. I mean, there's nothing difficult here, okay? But if you didn't get it and you watch it again and you still don't get it, feel free to telephone and speak with an instructor. So I'm going to end the video here and pick up with the next one and next problem in the next video.